How much does a mistake cost you? On a personal account, it's expensive. In a funded model, it's cheaper. Every trader makes mistakes, it's part of the process. But the difference is in what you pay for those mistakes. When you're trading with your own savings, one emotional decision can wipe out weeks of progress and thousands of dollars. In funded trading, the cost of mistakes is capped. Instead of burning your deposit, you pay a small fee for the program and you learn without blowing up your finances. Now, here's the twist. A lot of profitable traders online will tell you funded trading isn't for beginners. But what if they're wrong? Because if you approach it the right way, it might actually be the smartest move for a new trader. It can save you thousands of dollars in the long run. I've been there myself. I've blown up accounts. I've lost more than I care to admit. And every time it felt like maybe trading wasn't for me. But the truth was simple. I was paying too high a price for education. I was learning the hard way. Funded trading changes the game. Instead of risking thousands of your own money, you pay a relatively small entry cost. You prove your discipline through an evaluation, and once you pass, you gain access to trading capital accounts ranging from tens of thousands up to hundreds of thousands of dollars. You keep the majority of the profit, often 70 to 90%, while the firm absorbs the losses. That means mistakes no longer destroy your account, they become affordable lessons. Here's the reality. If you're brand new, you probably won't pass your first evaluation, and that's okay. Because in the beginning, your goal isn't to cash out payouts. Your goal is to build discipline, to learn how to control your emotions, execute your trades according to plan, and master risk management. The key question isn't how fast can I make money, but rather how cheaply can I afford to learn. Once you start showing consistency, funded programs open new doors. First, you trade smaller accounts. Then, as your performance stabilizes, you can scale. Some programs allow you to grow all the way up to $200,000, $300,000, even $500,000. But here's the catch. This isn't about one lucky home run trade. It's about proving repeatability, rules over adrenaline, process over ego. There are 3 golden principles that change everything for me. First, know the rulebook by heart. Profit targets, daily loss limits, maximum drawdown, news restrictions, memorize them. Success comes from never breaking them. Second, lower your size. Even if the program allows you to trade big contracts, start with the smallest size possible. That's how you protect your account and your psychology. Third, treat every evaluation account like it's your personal savings. Most traders fail not because of the market, but because they give themselves permission to fail. It's only $20, I'll just reset. That mindset destroys discipline. The real growth happens when you learn to fight your way out of drawdown with process, not with resets. So yes, funded trading can be a trap for the impatient, but it can also be the best tool for building discipline, patience, and consistency. It all depends on your mindset. If you see it as a shortcut, you'll fail. If you treat it as structured training with limited downside, you'll grow. Think about it this way. On your personal account, 5 mistakes can wipe you out completely. In the funded model, 5 mistakes cost you the price of participation. The learning curve is the same, but the bill is much smaller. And this is what makes the model so powerful. It doesn't reward flashy, one-off trades. It rewards routine, discipline, and the ability to stick to simple rules. One setup, one trading window, fixed risk per trade, a daily stop, and a clear journal. It sounds boring, but boring is repeatable. And repeatable is profitable. Here's a weekly rhythm that helped me. Sundays are for marking levels and setting alerts. Monday through Thursday is for 1 to 2 trades, then journaling. Friday is light trading or just review, no hero moves. Saturday is rest, no charts at all. And Sunday again is for review and small adjustments. This routine builds the habit of consistency. Funded trading won't make you successful overnight, but it lowers the cost of mistakes and it teaches you the habits that make success possible. You learn faster, you learn cheaper, and you protect your mental capital in the process. So if you've been struggling, stop asking, where can I make the most money right now? Start asking, what rules can I keep every day without fail? Because those rules are what will take you from demo trader to funded trader and eventually to consistent payouts. And here's the best part, you don't have to figure it all out on your own. I've put together a step-by-step guide that shows you exactly how to approach funded trading responsibly. From evaluation rules to trade execution checklists to journaling templates, it's all in there. For the best funded trading conditions available right now, go to the link in the description. Don't wait, secure your edge, get the right rules, and start trading smarter today. Disclaimer, trading involves risk. Results vary and are not guaranteed. Rules, fees, and availability differ by program. Always review current terms before starting. This content is educational and not financial advice.